Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors.
Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. Hey, in this episode, I want to get into a few interrelated topics, but with a particular focus on the build-out of certain business activity in the U.S., which we think is going to be a big positive, kind of an economic tailwind for our country. So let's get into it. I guess to start, people are kind of worried. We're here, it's sort of third week in November 2025. Market levels have been up. There's been a little bit of worry about an AI bubble, and we've seen the markets contract just a little bit, not a lot, and yet they seem to be stabilizing. And we've had another good NVIDIA earnings release, so that stock went back up. But think of it as still there's worries, right, around what's happening. And yet when we look at things like the third quarter earnings season, which is getting close to finishing up, basically we're seeing better than expected results. So there's almost like this robustness to the business environment. And honestly, while I haven't dug into it yet, the estimates for third quarter and maybe into fourth quarter GDP seem to be moving higher, the growth rates. And so anyway, all this to say, a lot of worry, and yet data is telling us that things are holding up okay. And what I want to focus on is one dimension that might be driving that, and we're expecting will be driving it in the future. And that's kind of this rewiring of supply chains. So think of it as, to start, maybe a reaction to dependencies that were creating problems during the shutdown of the pandemic, and realizing, we're interdependent between countries, and certain countries are saying, hey, we need to bring things back on shore. And you couple that with sort of this movement we've seen to try to bring some industrialization back to the U.S., production basically, and manufacturing. And so we think that's real. And basically, when we look, for example, at companies, right now, and this is just one tally, we see in round numbers $1.5 trillion in a multi-year kind of nearshoring and reshoring set of investments across sectors, technology or industries, pharmaceuticals, industrials. Examples would include Apple committing $600 billion, NVIDIA committing $500 billion, IBM $150 billion. In healthcare, we're seeing Johnson & Johnson at $55 billion, AstraZeneca at $50 billion, Eli Lilly at $50 billion, Bristol Myers at $40 billion. These are big numbers. And basically, it's this commitment to kind of bringing production back into the U.S. And so it's, those are obviously kind of heavy numbers. And that brings essentially construction. It brings jobs, et cetera. Now, one of the critiques has been, we get sort of labor costs offshore that are a lot lower. So this is either bad for shareholders or somehow, it's not going to translate to the U.S. And one of the key elements of making this a reality is artificial intelligence. So I want to come back to this idea of AI in this sort of build out of additional capability here in the U.S. But before we go there, let's take a pause and talk about how AI is affecting this. Essentially, there's a construction surge just related to that. So right now, for example, the U.S., and there's been many being built, has a total of over 5,400 data centers. So these buildings where basically there's a bunch of servers in there, NVIDIA chips and other chips probably, and it's where the processing's happening. And our total data centers, that total is more than, when we count we start going through the other countries that have it, it's 24 countries combined that you have to look at to get even close to our 5,400 number here. So that's quite large. Now, there's been estimates about capital expenditure builds for data centers globally at $7 trillion, that's the investment that's going to happen into data centers. And this is sort of emphasized or supported as well by government incentives really around this activity, especially semiconductors and probably grid equipment and cooling, all that. And so, when we think about investing, we're obviously sort of focused on that type of thing. But just to bring this back to our discussion, so it's like this ongoing build that's happening to support AI. AI in turn is going to be used to make what we do better across our economy, basically. And that brings us back to this idea of sort of the reshoring of capability. What's happening when these capabilities get built is automation is playing a key role, and probably artificial intelligence a little more broadly. So that's kind of interesting, right? Like building a factory where you're like, okay, we're going to use robots to do things that maybe if they were offshore, it would be humans doing that. And so people would say, well, that's not fair. Maybe we want to employ people. But, a different lens to look through is to say, well, okay, we can use robots, but boy, there's higher skilled employees that are needed to support that, whether it's the creation of the robots, the maintenance of the robots, whether it's the software that drives the robots, how to put it all together. And, so while there's this transformation going on in the workforce more broadly around AI and the availability of AI, as it relates to this particular activity, this is at least creating much higher skilled and higher wage roles. And that's, net in our view, a positive. And so anyway, think of it as essentially these capabilities being implemented. We're talking about efficiency in a way that may offset the idea that onshore labor would be more expensive if we did it all with humans. But by going to automation, that's one way to sort of fight that battle of keeping costs down. When if you do it overseas, it can be incrementally a bit lower cost and maybe better priced in terms of the end product for the client. So think of it as AI technology driven, and while it's a smaller head count, the jobs that are being created are higher skilled and higher paid, which is really, really important. And so anyway, I'll just say what I wanted to kind of talk through and explain is these numbers we're talking about, $1.5 trillion of investment into the U.S., the idea of the use of AI in the infrastructure build, the data centers that are being built, the support systems for all that, the idea that there will be just $7 trillion globally in capital expenditures into data centers over the next roughly 5 years, with 40% of that being in the U.S. These are big numbers, and they're going to have a positive effect on our economy. And so, we've been thinking about this as almost like the reindustrialization of America. It's going to sort of be this tailwind, really with a transformation that'll happen over not only years, but probably decades. But it's almost like a course shift that's happened. And of course, if the private industry and government remains supportive of it, it really fuels additional support of our economy, additional growth, and honestly, greater demand for AI, which circles back to all these other needs around data centers and software and all that. So again, really, in my view, kind of exciting and sort of super positive when it comes to what's going on for the economy and ultimately for workers in terms of people getting to learn new skills and be appropriately compensated for those. So anyway, listen, that's what we wanted to get into in this episode. We really appreciate you taking the time to be with us, and we'll look forward to catching you on the next one. Thanks so much.
Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.